Welcome to TradeTheMBI.com. This is Jones Reports for the 2nd of January, 2025. Hope everyone had a great New Year celebration. We're back at it with the market. Finished at the bottom side of things for where they were. It wasn't a shock. We'd seen the white NBI lead, magenta below yellow. These are all negatives. And now you even have the orange caught between cyan and green on the descending. So that's still continued weakness, but green is still over red. So you're going to get some support within there, and that's why we see the market currently up at this particular stage, but also having made new lows. And that's just short-term buyers at this particular with steel. When we look at the DOC holding things up, shakeout continuing to be negative from that standpoint. So intraday, you'll see the turnaround setups if they take place. It's just going to mean that getting over the 50% is going to be a tough one. Given what we're seeing from the daily readings here. Now, it's a little bit different when we look at the NQ. You can see that we don't quite have that orange dip below. So it hasn't moved into the continuation zone of the direction. And that's a bit of a bonus. We also see a little bit of movement for the magenta about to cross back over the yellow. The reading's pretty close, but still hasn't made the turnaround yet. So as far as that goes, this is still the call, but probably nothing devastating. Of course, that depends on if there's any additional terror attacks, things like that, that certainly can throw a monkey wrench into it. Of course, the latest attempt with the one in Bourbon Street, and then of course trying to blow up a Cybertruck in front of Trump Towers. Nice symbolism, but unfortunately, the Cybertruck was a little bit too strong, and it sort of ruined the whole construct. I guess next time I'd pick a cheaper car or something, but definitely interesting. And, of course, this gets back to the whole border security situation, and that's only going to add to the fuel of that. From a Treasury standpoint, you continue to see the Fed is at odds with the bond market. They are not happy with the situation. And, of course, with, continuing budget situations and that whole debt ceiling situation that's about to take place going forward, they just continue to create drama continually back and forth, and it creates a market dynamic. It's not productive. Bigger problems, oil, yeah, and despite everyone's belief that as soon as Trump comes in, oil is going to start to plummet, that's not necessarily the case, as we've talked about before. But this adds to the early inflationary numbers are going to still continue to be high. You're not going to get any reprieve there. And it's going to take some time for some of these things to develop, assuming that they can even be handled, and whether or not there'll be roadblocks and impediments put in place, which almost a guarantee that it's not going to be as smooth as they want it to go, even if they are in place to try and make changes. And of course, then we talked about what happens within trying to cut government spending and the deflationary effects of that. But it's strengthening for the dollar in a broader sense. When you look at the euro, it's impressive they've been able to even hold this 103 level. But it's not going to take much. Once it starts breaking down, it's just going to spiral. And that's going to have broad implications, at least from S&P companies and that. So this idea that they're all going to fare well and that the market should just continue to rise from it, I think that's just an argument that really doesn't have any basis in, how international trade works and that. And, that assumes you don't have any of the trade wars, which is also going to have a dramatic impact on sales of that, particularly since a lot of these companies have positioned themselves overseas, and they're going to have to repatriate back to the U.S. in order to avoid, potential tariffs and that. And that's going to be, of course, sector by sector. So it's going to make some very irregular and bumpy kind of roadmap, which I think is problematic in a lot of ways. At least from, if you're desirous of, some kind of consistency, which is why I think that volatility and definite market swings are set to happen. Gold, of course, rising on that oil setup, and then, gold still being held back from where it really should be, as we talked about, as it related to Bitcoin and that. Oh, yeah, did have to put that chart up there as Bitcoin. We've seen a huge increase in Bitcoin relative to what we saw from a gold standpoint, and that's a reflection of where at least you get the discrepancy between something that's completely unrelated to currencies versus gold, which is still tied to the dollar in quite a significant way, and also with the derivatives and the fact you can trade paper gold or fake gold. It makes it a little different. You don't have that situation in a Bitcoin. A little bit different from an ETH standpoint, simply because you have a greater supply that's always growing, and so it has a bit more of that relationship to kind of a regular currency effect. So will we get a blowout from the value of gold relative? Probably not so much, but I think that as we get some clarity on things, it will start to unfold pretty clearly. When we look at a 50K standpoint, you can see that every time we get our NBI white spike and then we start to fade down, you get your return to the zero. Particularly when it moves back to the leading standpoint. We're still in a bump right now, but you've got magenta at this point leading in a 50K standpoint, so that's enough to drive things. But if it fades back below and you get a cross back over of yellow with MBI white still leading, and you're going to get into a situation like this where it starts to build across, and then we come back and replay the 0% again. From an intraday standpoint, it was pretty straightforward from the morning. Wasn't a whole lot of excitement to buy anything. People were just rearranging their book, getting it squared away, and you can see the tiny little gap up to start. And in the European session right now, it's been nothing but sunshine to start the new year. So all in all, it's going to be positive, but I think that we have so many things about to take place and start to unfold. Of course, you just have the final remnants of Biden administration. When we look back at the record, it's going to be one of those where pretty much they just spent every penny that was possibly available, and even the pennies that weren't available that they borrowed from Trump's administration. So I think those are going to be shocking numbers as it's all unfolded, and it's really not helpful for a country standpoint because it's not something you're going to be able to dig out from anytime soon, which may have been the point. So we'll see how it gets managed, because it can really cause some real deep economic stagnation as well as a recession. So no, people aren't really talking about that one, but if you take out some of the excess government spending, we've been in a recession for quite some time. So, as always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.